Thursday, January 25th, market analysis, Stan Ehrlich. Very sorry, starting it very late today, currently 11:53 California time, usually around 10 o'clock I start. So this is about 2 hours late. Yeah, it's still before the market closes. So I start out with the market indexes, the E-mini in particular, and go through a few of the major market indexes, and then through the most popularly traded 23 different futures markets, and sometimes sectors and forex and so on. But here we go. Today, the E-mini, it looks to me like this market is starting to slip and going to continue for the next few days. We're overbought for 3 days in a row now. We opened, shot up, tried to make a new high for the rally, didn't quite make it, came very close, and is now back to where it opened on the E-mini. So slightly higher on the day, not very much. At the moment, about a point higher for the spider and about a point higher almost for the DIA, and we're down $0.50 on the Qs at this moment. But we still are down quite a bit from those 2 or 3 or 4 hours ago. So the slippage, I think, is going to continue. And I'm looking for a move down to this red zone here, around 48, 43-ish, which is the highs that we made back in December and early January. There's a chance I could slip down to the next red zone, which is a little above and below 4720, 4,720. Next chart is the spider SPY daily data. 4 days now overbought, same kind of commentary, looking for a slip back to support for the SPY 478 and a half, maybe a little lower, 467 and a half. Next chart, DIA has already for the last 3 days had the same lows, almost the same, and that was back to the previous highs in December and January, but it never had a really, really big rally. So it was easy for it to come back a little bit and be at the first layer of support, which is showing to be okay, doing what I would have expected. I don't think that's going to hold. I think we're going to come down to about 371, 370-ish, and then all of it will turn around and go back up. Next, and that'll take a few days to a week, all of it. The Russell 2000 is not the same picture because it just simply topped out. There was no little double top attempt. And we are already coming down quite a bit several days ago and got oversold and rallied. So I think it's going to dip down to close this gap from a few days ago to about 192 and maybe come back to the same lows that we had a week ago. Now the QQQ is much like the DIA and the spider in particular. Overbought for 5 days, had a very nice rally. Yesterday was the highest high, and the Qs are now staying, and for the last hour or two, lower than yesterday's close and yesterday's low. Plus the fact that yesterday we gapped up. That gap yesterday between between Tuesday's high and Wednesday's low, today's Thursday, looks to me like what we call an exhaustion gap. You don't really know until the market's already come down quite a bit, but I've seen enough of these in half a century plus to speak out about this being exactly where an exhaustion gap could be, should be, and I think it is, my opinion, to be proven right or wrong soon. So I'm looking for a retracement down to 412 in the Qs and maybe down to 394. Next chart is, I believe, the NASDAQ futures contract. And of course, it's about the same commentary. The prices are different. Remember, the futures open and close only within an hour each other. And the other major indexes are open for 6.5 hours from California, 6:30 in the morning until 1 o'clock in the afternoon. So there's a difference on the opening, a difference on the close. But the way the markets move on a day-to-day, week-to-week basis is extremely similar. Next, I'm going to ignore that. So it'll hang up in a moment. The March E-mini 1-minute chart, zigzagging its way down since the morning high, which is 7:23 California time today. And it looks like it could continue to do that. Futures, futures, futures. The S&P 500 E-mini, again, from a little bit different perspective. And if you want to contact me in any way, shape, or form, info@ersignals.com. So, overbought last 3 days, expecting a dip. Again, back to about, 4,842-ish, and maybe a little lower. Next, NASDAQ, no change in commentary from the previous group of index charts, but here's bonds. Now, if I'm right about the indexes going down some, not a lot, for a few days, maybe a week or so, I would expect the bond market to at least go sideways, if not a little lower also. We have just come down to support. I could easily expect it to come down a little more to 117.25, 30 seconds. And if it does, it probably is going to get oversold again. We are very, very close to oversold already. So my statement is, it probably will get oversold. That means we're in a prime combination of turning back up in interest rate futures, which is going to help the stock indexes turn back up at the same time. Notes, 10-year notes, at support, at a previous low a few days ago, already higher on the day by itself, and I love it. By the way, we got a buy signal almost in the exact low in the 10-year notes back on October 23rd. And yep, in the bonds, we got a buy signal, the green daily bar, on the exact low day, October 23 for the bonds. Forgot to point that out to you. Next, we have crude oil. Very strong day today, new highs for a month and a half, but it's now starting to get overbought again. Now I'm starting to look for sell signals. I could expect a little more of a rally up to about 80, 81 and then turn down, but I think it's coming close to turning down again. Hope I get a signal. Don't always get them. We got a sell signal on top here in natural gas, October 11, a sell signal almost on the top here. And again, that one was not particularly good. That was okay, pretty good, weak, dropped off quite a bit. That was a good buy signal. That was a bad buy signal. That didn't work, period. And that was a great buy signal way over here on the left. Back to current. Natural gas looks to me like it's going to make new lows, and new lows for a long, long time period in the next week or two, maybe 3. I got a sell signal. It worked for 2 days, great. Bounced for a day and a half-ish, 2 days. Now a bearish engulfing. Probably going to start it working toward the low last week, or actually that was Monday of this week, and even lower. Next, heating oil. Overbought at a little bit of resistance. I didn't put the line in there, but you can see how many lows and highs they're around or at that price level, which is today's high, which is where we are right now. So I'm actually saying it could stop immediately right here, right now, and turn down. I don't know if it's going to happen or not, but these are the conditions for it to do so. Next chart. So I'm starting to turn bearish on that. Gold. It now, I've got to say this again, today and as of yesterday's close, seems to be a legitimate downside breakout, a little on the slow side, but definitely legitimate for this head and shoulder top. There's the first shoulder high back in October 30th. Here's the head of the formation, which, by the way, had a sell signal right in the middle of it. I have the high of the whole damn formation with a bearish ER sell signal. That's the red line, perfectly on top. The last shoulder high was overbought, but unfortunately not a signal on 12/28 a month ago. Today, all of today is below the neckline right here, the little blue slanted line. So that is a good sign if I am going to believe this head and shoulder top is going to work properly. And if it does work properly, we're going to go down to 1,850. That's not a small break. It's all the way back to, guess what, our buy signal at the low day back on October 6th. This is totally automatic. I don't do this on purpose. It's the ER signals that are coded for NinjaTrader and TradeStation. Bad signal, great buy signal, great on the high, sell signal. And of course, the one we just had that's starting this trend down, it was December 4th. Next chart, silver. Nice rally couple days into resistance in a general sense, not stopping exactly where I thought it might. I think it's about to turn down and go down with the trend in gold. It already has made new lows for a few months, but it got oversold. So, 1, 2, 3 day bounce is not unheard of. I'm looking for it to make new lows. Next, platinum, comes next. It stopped at resistance on the last few days rallies. Now it's starting to close a new low, closings and new low prices for a few days. I think it's about to make new lows and below 882.20 and challenge the lowest low for a long period of time, 855. And again, I repeat, these are continuation contracts. You may be seeing prices that are for the nearby tradable futures contract, but they could be a slight bit off, depending upon the way the continuation or perpetual, same thing, contract is calculated. I like them because they're great with support and resistance and chart formations and cycles over years and years of time frame. Next, natural gas. Well, between a rock and a hard spot, and we're between. So I think this will turn down at any time for no damn good reason other than the trend is down. You stopped at the trend line. We're getting close. I'm looking for lower levels. I don't have a signal. Next, soybeans. Bearish engulfing today, not overbought so we don't have a red like we did on the top. Green almost on the bottom, green on the bottom, green again on the bottom. So looking for red and green is all you really have to do. So I'm looking for lower levels, breaking a new low ground very quickly the next few days. Next, and how far down are beans going to go? Well, I gotta say at least down to 1170, and it's very possible 1125. Next, bean oil already starting to make new lows for the longer term trend today. Looks like it's going to close below previous low closes. What can I say? Bean oil is probably going to continue to trend lower, and I would not be surprised to see 42 or a little bit below in a week or two. Next, meal. Same kind of story, but at least we bounced off a bull trend line a few days ago in an oversold condition, but it didn't hold. Today is a bearish engulfing Japanese candlestick. That by itself implies the market's supposed to go down, let alone if it was one of my specialized versions, which it's not, otherwise it'd be red. No great sell signals in this particular soybean meal chart. And frankly, I don't see any great green ones either. That's not a good green. That's not good. And that red one didn't work quite the way I expected. Yeah, unfortunately, meal's not been very good to us. Talk about silver and gold being good last year. Unbelievable. Next, corn. Oversold, bouncing maybe up to resistance at 456. And I can't rule out a little bit more, maybe 490. But that's about it. Don't have any faith in the rallies. Long-term bear trend. Looks like it's going to make new lows in a week or two or three. Bearish. Next, wheat. Same comments across the board. Resistance above the market. Don't have any faith on rallies. Looking for new lows for months and months in a week or two or three. Next, cattle. Today at this point has a bullish engulfing. Outside up day. But it is also in an overbought condition with a very strong rally into a resistance area I've been talking about for weeks. My upside objective is being fulfilled while we're overbought on a sharp rally. I just said all that. This, ladies and gentlemen, is a perfect place for it to stop rallying. And that's exactly what I have to say. I think maybe today's high is the high for cattle and it's going to go trending right back down again for weeks and maybe longer to come. If I'm wrong, I think I'm really close price-wise and very close within the time frame of the next few days. We'll find out. Live hogs. I got to say the same thing almost. Not quite a resistance, but overbought. And I'm expected to rally up to that resistance area, so I got there. Yeah, tiny bit shy, but good enough. So it is close to turning down. And I do expect it to challenge its previous lows in the ballpark of 73.72. Next, orange juice. Well, if you've been following me for a few months, you know I picked the shoulder high, the head of the head and shoulder top, and a bearish engulfing on the day the last shoulder happened for a head and shoulder top that without much problem worked unbelievably well. When it broke out, it went down the first breakout day, then one more, 2, 3, 4, 5, 6 days in a row after the breakout. Didn't quite get to my objective right here, but it sure as heck did a few days ago. I missed by a hair. The formation said it was going to go down here. It did. No less. I got a buy signal almost at the objective. I cannot really say very honestly what's going to happen next. I got no signals. I'm in a very neutral situation. I think because the trend is down, it's going to make new lows. Next, cocoa. Oh my. Okay, red on top. It's a double top over a 3-day period. We have an ER sell signal today happening as we speak. It's a bearish engulfing in overbought condition, and I'm going to stretch my neck out like crazy. This is the high day, in my opinion. You know, past performance is not indicative of future results, and hypothetical returns to some inherent limitations. NFA standard disclaimer, I do not have any licenses anymore. I'm a John Doe, so to speak. Used to be a commodity broker, stockbroker, and hedge fund manager, but just now an experienced trader. So, bearish engulfing. This is the high day, in my opinion. We're going to come down to at least 4,330 soon, next week, maybe even early next week, because this kind of a bearish engulfing under these kind of conditions is just absolutely, on a scale of 1 to 10 on my trading system, a 9 or even better. It better work. I just cannot guarantee it, but I certainly like the way things look at this moment. If it doesn't work, I'll tell you why and what happened and so on day by day. Next, coffee is starting to come down today from what I think is the last shoulder high on, I'm sorry, head and shoulder top. It's one of my favorite patterns, head and shoulders. There's a whole variety of things that apply to that pattern, and I really like the way it looks at this point. Shoulder high yesterday, bearish engulfing at approximately the right place and at about the right time. Maybe a couple of days late, but that's good enough. Neckline almost flat at 175 and change. Downside objective I haven't measured yet is approximately, just because I'm going to eyeball this real quick, to about here, 150. Give or take 2 chunks. Below 160 easily, I would say. Maybe below 155 easily. But 150 I'll use for the moment. And it hasn't broken out yet. The pattern's not finished. We're finishing the shoulder. I need to close below 175.70. If it happens correctly, it'll be a day or two from now, 3 or 4 days. Then you get your major breakout. Then you get a bounce. Then you get a continuation of the move down. Next chart is sugar, major resistance area, overbought conditions, starting to turn down today. I think today's high is it, and we're going to start to come down all the way to below 22 easily. Next, cotton the rag, overbought, could turn around at any time, has not yet. Don't jump the gun, don't get in too early, but keep your eye on it for, of course, CR sell signals or whatever you like to use that works pretty well when you're in overbought conditions also. Next, the E-mini bounced back up again, now a point higher plus a hair. DIA, same statement. Nothing's rallying a lot. You guys have a great day. I got to go. Sorry this is so late today. Thank you. Mañana.